PantheonAI presents PantheonAI Podcast, April 25th. Welcome back, everyone, to the PAI Morning Briefing.
And good morning. I'm your host from PantheonAI, and today is April 25th, 2025.
Good morning to you, too. Hope you're ready for a really in-depth look at the markets and all the headlines that are setting the tone for our trading week.
Absolutely. We're going to have an engaging conversation, blending market data, expert insights, and maybe even a few jokes along the way. Because, hey, who said financial analysis has to be entirely serious, right?
Definitely not us. So let's just kick things off with a quick market overview, looking at the major indexes.
Okay, hit me with the numbers.
All right, the S&P 500 closed the day at approximately 5,475.1, which was down roughly 0.266%.
Okay, a slight dip there.
Yeah, and over in the realm of the Dow Jones, that blue-chip benchmark ended the session at nearly 39,882.2, slipping by about 0.408%.
So the Dow saw a bit more of a slide than the S&P.
Exactly. Meanwhile, the Nasdaq, which is our go-to barometer for technology and growth stocks, settled at around 17,177.7, with a modest decline of roughly 0.025%.
Wow, the Nasdaq was barely down. That's interesting compared to the others.
It is. And the Russell 2000 wasn't far behind in its modest retreat, sitting at approximately 1,942.6, down a little over 0.1%.
Okay, so overall, traditional markets saw a slight pullback across the board today.
That's the picture for the major indexes, yeah. But if we look over at the cryptocurrency space, it's a slightly different story.
Oh? What's happening there?
Bitcoin appears to be the bright spot, trading at roughly 94,582 with a gain of just over 0.63%.
Almost a full percent gain? That's pretty solid for Bitcoin, especially when traditional markets are dipping.
It really is. It suggests investors are still finding reasons to back digital assets amid that traditional market hesitation we just talked about. And Ethereum, the second largest digital currency, is also in positive territory, trading at around 1,773.1, up by roughly 0.17%.
So both major cryptos are in the green. That's a clear divergence from equities today.
Totally, and as we transition into our deep dive on major market trends, let's take a moment to reflect on what these numbers might mean as we move further into the week.
Yeah, what's the takeaway from this slight downturn?
Well, that broad-based, albeit slight downturn in our major indexes really signals an underlying cautious sentiment among investors right now. There's a noticeable pullback in traditional equities.
Okay, cautious sentiment. And I've heard some market veterans associating this with sector rotation, right?
Exactly. A shift from high-growth technology stocks into more defensive sectors. It appears investors might just be responding to some mixed signals from both earnings reports and macroeconomic indicators.
That makes sense. And if we take a closer look at tech stocks specifically, their earlier momentum seems to have really slowed down.
Oh, absolutely. Many are questioning whether that tech bubble of the past few years has gone too far. And this caution is compounded by concerns about rising interest rates and the implications of a global economic slowdown.
So a lot of headwinds for tech right now, but you mentioned crypto is rallying on a separate track.
Yeah, despite its innate volatility, it seems to be rallying, perhaps because of its decentralized appeal in uncertain times. This divergence really begs the question:
are digital assets becoming the new safe haven, or just a speculative playground in an environment where traditional stocks are experiencing uncertainty?
Precisely. It's a fascinating dynamic to watch unfold. Speaking of trends, let's delve into how some of this sentiment is reflected in today's news.
Sounds good. What's on the docket?
We have a jam-packed lineup of stories covering sectors from technology and energy to finance, and even, believe it or not, pet wellness.
Pet wellness? Okay, you've got my attention. And each of these stories has a unique angle that could have implications for portfolios, right?
Absolutely. Our first headline comes from none other than Jim Cramer.
Ah, always lively insights there.
He never fails to attract attention. His top 10 list of things to watch in the stock market this Friday highlights a nervous vibe among traders. After a 3-day winning streak, stock futures dipped, which hints at a possible profit-taking phase or just a recalibration of expectations.
Right. And when you think about how even seasoned traders can be taken aback by market momentum, it really makes you wonder.
Are we entering a period of consolidation? or near-term volatility. Cramer's observations always stimulate a healthy debate, and in today's case, his list might be a gentle reminder that every rally can be followed by a correction.
Good point. Okay, what's next?
Next, we have some challenging news for fans of Intel.
Oh no. I've heard some tough talk about them lately.
Yeah, analysts have described Intel's turnaround as a, quote, herculean task, advising investors to steer clear of the stock for now. It's been under pressure since earnings, with one analyst bluntly stating there seems little to get excited about.
Ouch. That's pretty direct. For underdog story lovers, that might seem like a setup for a rally, but it sounds like the prevailing sentiment is bearish.
It really is. And Intel's challenges don't just reflect company-specific issues. They also raise questions about the broader state of the semiconductor industry, especially with global supply chains still being a hot topic.
True. The chip industry is so interconnected. All right, moving to energy?
On the energy front, Schlumberger has provided us with a bit of a cautionary tale. Their stock has fallen following a rare earnings miss.
Rare earnings miss? That's significant for a company like Schlumberger.
It is. And it was accompanied by a stark warning that a slowing economy and uncertain tariff policies could dampen demand for oil drilling. Schlumberger has long been considered a bellwether in the energy sector, so this news might well signal further headwinds for companies reliant on robust oil exploration and production.
So if Schlumberger is feeling the pinch, others in the sector might too. It makes you ponder, as we move towards a more uncertain economic environment, which sectors will manage to weather the storm and maybe even outperform.
Exactly. Something to definitely keep an eye on. Turning our attention to the foreign exchange market, there's been notable chatter regarding the AUDUSD pair.
The Aussie dollar. What's happening there?
It extended its highs during Monday, Tuesday, and Wednesday, but then ran into a stubborn resistance zone.
A resistance zone? How far back does that go?
One that's been capping its momentum since as far back as November and December of 2024. This specific range, identified between 0.6429 and 0.6442, has proven to be a tough nut to crack.
Wow, so that's a pretty established ceiling for the pair. For currency traders, that technical pattern raises important questions about the near-term trajectory.
Will it finally break through that resistance, or just continue to consolidate until some new catalyst emerges? It's a key chart to watch.
Definitely. Shifting gears a bit, stepping into the personal finance arena, borrowers should really take note of an important development concerning student loan payments.
Oh, this is important. What's happening?
Loan servicers have announced that defaulted loans will resume being sent to collections starting May 5th.
May 5th? That's coming up soon. So for anyone who might be teetering on the edge of missing payments, this is a major wake-up call.
Absolutely. And definitely not the kind of wake-up call you want on a Monday morning. It's a reminder that personal finance discipline is just as important as portfolio discipline, and it underscores how financial stress can impact everyday life.
That's a really crucial point. Okay, let's touch on some political and legal drama that's hitting the news.
I think I know where you're going with this. George Santos?
Yep. Former Representative George Santos is preparing for sentencing in a federal fraud case in New York. He was expelled from Congress after facing charges like identity theft and submitting false financial reports.
Right, facing the consequences of his actions now. It's a dramatic twist that obviously captivates political observers, but it also raises questions about accountability in public office.
It does. And when those at the top play fast and loose with the truth, it often sends ripples across the financial markets, particularly in areas that rely on regulatory confidence.
That's a good way to put it. Okay, what about corporate developments?
Invesco Limited recently made a filing regarding a public dealing disclosure related to QUALCOMM Incorporated.
Invesco and Qualcomm. While these filings often fly under the radar for everyday investors, they do remind us that financial markets are constantly buzzing with corporate maneuvers.
They really are, each with potential long-term implications for strategic positioning, especially within the tech sector in this case. These disclosures, technical as they might be, are worth keeping an eye on if you're invested in tech stocks.
Good reminder. Another noteworthy development is in the industrial sector.
Ah, yes. Hawkins has acquired Water Surplus to expand its water treatment offerings.
Okay, Hawkins acquiring Water Surplus. This move signals a trend toward increased consolidation and diversification within the water treatment industry.
Right. It's a sector that might not always capture headlines, but it is absolutely key to public health and infrastructure. And the implications are significant, especially when you consider that water sustainability is emerging as a critical theme across global markets.
That's very true. It's a quiet but essential industry. And we've got more acquisition news, this time in manufacturing.
We do. Nano Dimension recently closed its acquisition of Markforged and has appointed Markforged CFO as its new finance chief.
Okay, Nano Dimension, acquiring Markforged. That's a strategic play aimed at enhancing Nano Dimension's position in additive manufacturing, isn't it?
Exactly. Additive manufacturing is an industry that's really earning accolades for revolutionizing production methods. There's always something exciting about seeing companies combine forces to create synergies, much like two puzzle pieces coming together to form a bigger picture.
That's a nice analogy. It leaves you wondering if strategic acquisitions like these could be a blueprint for growth in an era defined by rapid technological change.
Could be. All right. Last but not least, you mentioned pet wellness earlier.
Ah, yes. We've got some heartwarming and perhaps profitable news coming from that sector. FoodScience, LLC, has announced the acquisition of Natural Dog Company.
Natural Dog Company. They've got a long-standing reputation for high-quality dog care products, based out of Vermont's bustling market for premium pet products.
They do. And this acquisition really showcases how companies are not only adapting to consumer trends, but are also diversifying their portfolios to capture that rising demand for pet wellness.
It's a great reminder that even in times of economic uncertainty, there are opportunities to invest in industries that cater to everyday needs. After all, our pets definitely deserve the best too.
Couldn't agree more. So now that we've covered a comprehensive list of important stories, let's pivot towards a detailed sector analysis, taking a closer look at our leading industries.
Okay, starting with tech, obviously Intel struggles have reverberated across the semiconductor and broader technology sectors.
Right. That earnings report, coupled with analysts' bleak outlook, really underscores the challenges that legacy tech players face in an era dominated by nimble startups and rapid innovation.
Exactly. One might say that Intel's plight isn't just a company-specific issue, but a cautionary tale on how staying static in a dynamic industry can really lead to obsolescence.
That's a stark contrast to others in the tech realm who have managed to push the envelope and seamlessly integrate new technologies. As we look ahead, the tech sector seems poised at a crossroads.
Will we see a recalibration that favors disruptive innovation over old guard strategies? It feels like a pivotal moment.
Definitely. And in the energy sector, Schlumberger's recent earnings miss and subsequent cautious guidance serve as a bellwether for the industry as a whole.
Energy companies are really grappling with the dual challenges of a slowing global economy and a shifting regulatory environment, particularly with those uncertain tariff policies that could impact demand.
It's an environment that calls for robust risk management strategies and might pave the way for further tactical rebalancing in investor portfolios. Although oil and gas have traditionally been considered staples, there's a growing recognition that energy diversification, like investing in renewables, might ultimately provide a more stable return profile in times of economic headwinds.
Good point. And finance, as always, sits at the cornerstone of market movements. That news about student loan default reassignments is another reminder of the delicate balance between personal finance and institutional policy.
With defaulted loans heading back to collections, it's a wake-up call not only for borrowers but also for policymakers who need to address the broader trend of financial distress among younger demographics.
Exactly. As an expert, I often emphasize that the financial fundamentals of a nation are intricately tied to the well-being of its citizens. So while institutional investors might be fretting over quarterly reports, the real-life implications of policy shifts reverberate much further down the line.
That's a powerful perspective, and perhaps one of the more unexpected yet intriguing developments in our market landscape is all this acquisition buzz we've seen across various industries.
Totally. From Nano Dimension's strategic consolidation in additive manufacturing to FoodScience's move into the pet wellness segment, these corporate shuffles really reflect a broader trend of companies seeking to expand their horizons beyond traditional market boundaries.
It really makes you wonder, in an era when industries are becoming increasingly interconnected, could we be on the cusp of a new wave of cross-sector innovation?
I mean, if a company can successfully manage the complexities of merging technology with manufacturing or pet care with consumer health, then the possibilities for hybrid industries are practically limitless.
That's exciting to think about. On the global front, the implications of these market movements are significant, aren't they?
Oh, absolutely. With investors around the world weighed down by cautious sentiment in traditional sectors, areas like digital assets and those niche consumer markets are gaining traction. It really reinforces that diversification strategy many analysts have been advocating for.
Right. Global economic trends don't exist in a vacuum. They influence everything from government policy to the strategic decisions made by multinational corporations.
Exactly. And in markets such as ours, where a single geopolitical event can send shockwaves across continents, keeping an eye on global trends isn't just wise, it's essential. As much as we debate the pros and cons of various asset classes, the interconnected world of global finance reminds us that diversification is more than just a buzzword, it's a survival strategy.
Well said. Now let's move on to some expert insights and predictions based on your analysis and reliable sources.
Okay, based on what we're seeing, I expect that the soft pullback we observed today in the major indexes might be short-lived, especially if investor sentiment picks up next week.
Okay, potentially short-lived.
Yeah, but caution should definitely be the watchword for the near term, particularly in technology and energy sectors. It wouldn't surprise me if we see further consolidation as companies reposition themselves in response to the evolving macroeconomic landscape.
So, consolidation expected in those areas. And for those keeping an eye on cryptocurrencies?
The relative strength of Bitcoin and Ethereum could very well draw fresh institutional interest, although, with a healthy dose of caution regarding regulatory developments.
Always that regulatory wildcard with crypto. I like how you often inject a bit of humor into these discussions, though, because navigating the markets every day can feel a bit like trying to predict the weather in a city where 5 different climates converge.
Huh? It really can. One might say that investing today is similar to planning a picnic in the middle of a season where you might encounter sunshine, rain, or even a sudden gust of wind.
That's a good one. But as any seasoned investor knows, a well-prepared strategy is like packing an extra umbrella.
You might never need it, but you'll be glad when you do. Exactly. As we begin to round out this discussion, let's reflect on some thought-provoking questions for our audience.
Okay, what should they be thinking about?
Given the current market conditions, what do you believe is driving the cautious sentiment among institutional investors?
Good question. And could that pullback in traditional equities actually be setting the stage for a deeper correction? Or is it merely a natural pause before the next wave of optimism?
Right? And considering the divergent paths of our traditional markets versus digital assets, is it time to rebalance portfolios to embrace a wider array of asset classes?
Those are all excellent points for reflection. We really encourage you to mull these questions over and even discuss them with your peers.
Remember, a great conversation sometimes starts with a single, well-placed question. Before we wrap up, let's quickly revisit the key takeaways from our discussion today.
Sounds good. First off, the major indexes are experiencing modest declines, reflecting a cautious tone among investors, despite some sectors showing resilience.
Next, while traditional technology stocks are under pressure, with Intel being a prime example, there's a noticeable divergence as digital assets like Bitcoin and Ethereum maintain their upward momentum.
The energy sector, signaled by Schlumberger's earnings miss, faces its own set of challenges amid a slowing economy and uncertain geopolitical policies.
Meanwhile, corporate acquisitions in industries as diverse as additive manufacturing and pet wellness underline that trend of diversification and strategic realignment across the board.
And lastly, on a personal finance note, the returning focus on student loan defaults highlights the broader implications of fiscal policy on everyday citizens, reminding us that the market is ultimately a reflection of real life.
Really well summarized. And we want to give a big shout out to PantheonAI, your information copilot in these complex financial times.
Our conversations today are designed not only to inform, but also to provoke thought and provide a balanced perspective on where the markets might be heading. Whether you're a seasoned trader or just starting to dip your toes into investing, our goal is to equip you with the insights you need to navigate these turbulent waters with confidence.
Absolutely. And as we sign off for today, I want to leave you with one final reminder. Learning shouldn't feel like a full-time job.
That's a great point.
The markets will always throw new challenges our way, but by staying informed, asking the right questions, and engaging in thoughtful discussion, You can always improve your decision-making process.
So what are you planning to do with your portfolio in the coming days? Are you ready to shift gears as market dynamics change, or will you hold steady through the storm?
And if you ever have a question or need a second opinion, remember you can always ask questions to our AI copilot.
Exactly. Thank you for joining us on this journey through today's market data, news headlines, and expert analysis.
We look forward to continuing this conversation tomorrow. Until then, take care, stay curious, and keep questioning the complex world of finance.
Have a great day, and we'll see you in the next episode of the PAI Morning Briefing. PantheonAI, your information copilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.